The pandemic era boom of fake rich Americans are starting to go broke. I'll show you. Between 2020 and 2021, Rolex prices were booming, luxury car prices were breaking new record highs, and art prices could not be controlled. Well, now it looks like that boom is starting to go bust. In 2020 and 2021, not only were you seeing Rolex prices booming, but you couldn't even get your hands on a Rolex even if you were willing to pay thousands of dollars over asking price because the wait list for a Rolex was so long. This booming demand for a Rolex naturally drove up the price of a Rolex watch between the years 2020 and 2022. This is a chart from watchcharts.com, and you can see that between 2020 and 2022, the prices of a Rolex started soaring high, and then this is what has been happening with Rolex prices ever since. You can see Rolex prices have been tanking. Why are Rolex prices falling so fast? Because if you paid $35,000 for a watch 2 years ago and now you're struggling to pay your bills, the simplest thing to do is just sell your watch, and this has created a whole new boom or tidal wave of sellers of Rolexes in the market, causing the prices of Rolexes to fall. And it doesn't look like we're at the bottom yet, but I'll talk about that in just a minute. Luxury cars were another hot commodity in 2020 and 2021, and I'm not talking about the people that went out and paid $5,000 over MSRP to go out and buy a new Jeep. I'm talking about the people that were paying tens of thousands of dollars as a premium to get their hands on a G-Wagon or a Lamborghini during the free money days of 2020 and 2021. And the reason why this is so crazy is because even if you were willing to pay $50,000 over asking price for a new G-Wagon or a Lamborghini, you still couldn't even get one because dealerships were so backed up with orders that they ran out of all their inventory until 2024 back in 2021. Now, I personally like nice cars. I haven't bought myself a nice car. I'm driving around in a beat up Toyota that's missing a bumper right now, but I've been keeping my eye on the Ford Raptor because that thing is a beast. And a couple of years ago, you couldn't get your hands on a Ford Raptor unless you knew somebody and you were willing to pay a hefty 5-figure premium. Today, if you go to Carfax and you scroll down, you'll see that every single Raptor being sold today is being sold for thousands of dollars below Carfax value. Not to mention that you're also seeing the resale value of G-Wagons and some other luxury cars beginning to fall. And then you have art. Yes, art. We saw art prices grow to new record heights at record speeds in 2020 and 2021 as one of the top places for rich people or fake rich people to store their new wealth. Today, we're seeing a lot of art prices come back down to earth as art investors are now reassessing how much money they want to have tied up in art. Now, people can joke around all day about other people who bought something that they shouldn't have, but the real question here is what's causing this change in the economy and our money environment? And if we go back to this Rolex chart right here on the screen, you'll see that Rolex prices started to really peak and shift in March of 2022. So the question is, what happened in March 2022? Well, March 2022 was when the free money ended because March 2022 was when the Federal Reserve Bank finally started raising interest rates for the first time in years. Now, this is a very important economic concept to understand. We've been covering this in Market Briefs. If you have not joined Market Briefs yet, I highly recommend you do so. It is a free and easy to read newsletter that I created to keep you up to date on what's happening in things like the economy, the housing market, the stock market, the global economy, and the crypto market. You can read it in less than 5 minutes every morning, and it's completely free. So if you have not joined Market Briefs yet, I got the link for you down in the description below. And you can also go to briefs.co/market. That's briefs.co/market if you'd like to join. But what we saw happen before 2022 was that when 2020 hit and the pandemic shut down the economy, we saw a lot of quantitative easing, stimulus, and money printing, which means the government and the Federal Reserve Bank were printing and spending money like crazy, and this was flooding our economy with tons of free and easy to access dollars, whether it's in the form of loans, whether it's in the form of grants, whether it's in the form of some sort of stimulus. This money was entering our economy, which meant people were getting more money. Now, if people were getting more money, that meant people had more ability to spend. But that shift really stopped in 2022 because that was when inflation started to become a problem. And that was when the Federal Reserve Bank began their war on inflation, which was the hiking interest rates. Now, interestingly, the Federal Reserve Bank was the cause of the inflation in the first place because they were the ones that opened up the money printer, that opened up the quantitative easing, they flooded the markets with all this free money. And then came March of 2022, which was when they realized we put out too much money and now we need to take this spending back. And that was when they started their fight on inflation by raising interest rates. Now, between that part of 2022 and today, the Federal Reserve Bank has raised interest rates very aggressively. The only other time that they have raised interest rates this rapidly was back in 1981. And so now we have seen the interest rates rise very quickly, which means the Federal Reserve Bank has been working to cool down demand. They've been working to cool down spending. They've been working to cool down the economy, which means if you had access to this free and cheap and easy money, and you didn't really know how to build true wealth, but you finally got a little bit of money in your pocket, you wanted to do what everybody else does with their money, which is show it off. Because what most people do is when they make money, they want to spend it. And so if you were able to make any decent chunk of change, you wanted to show it off. Maybe you made this money in cryptocurrency. Maybe you made this money in your business. Maybe you got a big raise in your job. Maybe you sold a business. People were able to get more money in whatever ways they could. And because now they had more money, if you didn't have that financial education and you were not putting this money in assets, you were going out and spending this money, which meant anybody with a little bit of money was going out and buying a watch. Anybody with a little bit more money was going out and buying cars. And anybody with even more money was going out and buying fancy art. And so now you had these markets booming because watch markets and car, especially luxury car markets and the art markets really vary based off of how much money is out there, which is also based off of how strong the economy is. And so now we were seeing the economy boom, not because the fundamentals were necessarily strong, but because there was so much new money in the economy that everybody had money to spend. And so our economy was booming and people were spending money. Now we're seeing things change. The Federal Reserve Bank is still aggressively working to fight inflation because, well, inflation has not really started going down steadily. In fact, our most recent inflation report said that inflation has been rising the last few months. And now because of that, interest rates have gone up so much, which has made borrowing money more expensive, which has made spending money a little bit more difficult, which has slowed down the economy. Now, have we seen spending slow down significantly? No, we're still seeing people spend money. But people are now realizing, okay, my housing costs are a lot more expensive. My grocery costs are more expensive. My travel costs are more expensive. Everything that I want to buy is more expensive. And I don't want to keep having to cut back on my lifestyle. So I need more money in order to continue funding my stuff. And so now if you're sitting in your house with this very expensive watch on your wrist, or with this very expensive car in your driveway, or with this very expensive piece of art that you could liquidate, well, now you can have some more cash in your pocket that way you can continue living your lifestyle or potentially pay some of your bills. And this is where we've been seeing a lot more supply of these items in the markets, because when you have everybody that has money that wants to buy a Rolex, or everybody who has money that wants to go out and buy a Lamborghini, now you have all this demand, not enough supply, that pushes the price of things up. Today we're seeing the opposite happen. And we have not hit the bottom yet because interest rates are still, well, they still might be rising, but we still haven't fully felt the impact of the higher interest rates, and spending is still very strong, and people might be running out of the ability to spend, especially now that student loans are restarting. So now we are hitting a completely different point in the economy, like this fluctuation in the economy where now we went from people just spending money to now people are cutting back on their spending. People are having to pay down some of their debts. People are having to make more financially smarter decisions. Now, you making a financially smarter decision is good for your wallet. It's good for your personal wealth. But it's not good for the economy, because if you're not spending money, Rolex isn't making money. If you're not going out and buying new cars, G-Wagons are not making money. Mercedes is not making money. And so this is where you have to understand that in the economy, spending is great. In the economy, you going into debt is great. In the economy, you maxing out your credit card is great, because that means you are keeping the economy booming. But for your personal financial situation, that's not good. In your personal financial situation, you going out and financing a brand new G-Wagon is not a good investment, because that's a losing liability, plus you're paying interest to finance that. If you want a G-Wagon, nothing wrong with that. I like nice trucks. I like nice cars. You got to make sure you can afford it. That it's not going to put you into a financial hole to drive this heavy machine. And this is where understanding now, you have to be able to protect yourself financially. And that means you have to understand how the economy works. And that means you have to understand how our economic system works. And that means you have to understand how to build wealth too. And that means you have to understand how do you spend money. Because if you spend every dollar that you earn, you're never going to have a chance to build wealth. And this is one of the reasons why most Americans are broke. It's not because they're not making enough money, although some people are not making enough money. It's because most people have no idea of what to do with the money that they get. And this is the biggest shift that most people need to make in America to build wealth, is you have to understand, what do you do with the money that you earn? That way you can not only protect your money, but also grow your money, because that's what wealthy people are working towards. Wealthy people want to use their money to grow their wealth, while most Americans want to use their money to drive a fast car. When I first started learning about entrepreneurship and I first started seeing success in entrepreneurship, this is years ago now, I was so obsessed and I was so excited because I finally, for the first time, started making decent money. And if you want to quantify decent money, it was probably $200,000 or $300,000 a year as an entrepreneur from my own